Hello everyone and welcome to today's Mondac webinar in association with Anderson, Mori and Tomotsune, who will provide a detailed update on the Japanese M&A market. My name is Dan Sampaio and I'm joined by a brilliant panel to take us through today's discussion. Jen Takahashi handles a variety of corporate matters with a particular focus on cross-border M&A transactions involving Japanese entities. He provides thorough and practical legal advice based on his experience working in Singapore and Australia, as well as at the M&A division of a major securities firm in Japan. His other major areas of practice encompass domestic M&A deals, including public deals, general corporate, antitrust and commercial contracts. He also regularly advises on labour and dispute resolution matters for domestic and overseas clients. Ryoshi Kaneko is the co-representative of the Brussels office with extensive experience in M&A, private equity, emerging growth, venture capital and competition law. Ryoshi's professional experience includes stints with the corporate M&A and competition law departments at top law firms in London, Brussels and Madrid. Besides the depth and breadth of his experience, Ryoshi is also particularly noted for his ability to provide clear and highly effective bilingual advice to international clients on cross-border transactions involving Japan. Now, before I hand over to the panel to begin today's webinar, a housekeeping item. You can submit questions to our panel by typing them into the questions pane of the toolbar on the right-hand side of your page, and the panel will endeavour to answer as many questions as possible today. It's now my pleasure to hand you over to Ryoshi and Jen to begin. Thank you.
Okay, hello everybody. Good morning, good afternoon to all of you. I believe I can successfully sharing my screen, but just let me know if there's any issue. Okay, so I'll go ahead. So as introduced, I'm Gen Takahashi. Maybe I will just show my profile page. I'm currently in Singapore, actually. I'm a co-representative of our Singapore office, but I also have a base in Tokyo, so I have both contacts. I started my career in Tokyo like 15 years ago. I spent some time in the US, Australia, and Singapore. From that experience, I'm handling various international matters, and I'm advising a lot of international clients for their investments in Japan. So I'd like to share as much experience as possible in this slide, but the time is limited. So yeah, just let's see. So I just hand over to Ryoichi for his brief introduction.
Thank you again. I'm Ryoichi Kaneko, and a partner at the Tokyo office and the Brussels office to be opened in a few months. And I'm a co-head of the Brussels office. And given my background and practices in Europe, I've been working on the cross-border transaction between European region and Japanese market. And especially in an M&A area and merger control and FDI regulation, which I will touch today. So I'm happy to talk to you all. Thank you. Take it back, Gensan.
Okay. So we'll go back to the front page of our slides. So I have 5 topics for today's presentation. Dan kindly said that it's a detailed update of Japanese M&A, but because we have like essentially 15 minutes, I apologize beforehand that it will be probably like a summary of the Japanese M&A currently going on. Oh, just to let you know before we start, we also wrote article titled Comparative Guide 2023 for the Japanese M&A part. So the presentation today will be a brief one, but you can actually refer to that on doc page, right? So let me start first from the introduction of Japanese M&A. So just before we get into the details, the focus of our webinar is as written here. So we have limited time, so we will not touch a lot on like outbound deals from Japanese clients. We mainly focus in this webinar on M&A deals happening in the Japanese market. So that includes both pure domestic deals and investment from overseas, so foreign investors. Okay, so let's move on to the next slide. So I would first touch on the situation about Japanese M&A deals right now. So about the number of Japanese M&A deals in 2023, as written here, there was a slight decrease in the number compared to the preceding year, 2022. But that was just a slight decrease, about like 10% or like. So the decrease was probably due to like the global trend, global recession trend. There were some economic impacts on the Japanese market as well. There could be some like geopolitical issues affecting Japanese market. But as I wrote here at the end of the slide, there are actually various positive factors to accelerate the M&A in Japan. So one is, of course, the depreciation of Japanese yen. That's a historical weak Japanese yen. So that might accelerate the investment into the Japanese market. Also, the low interest rate would help foreign investors or domestic investors to consider the financing arrangement within the Japanese market. So next slide. So this is extracted from a website. So you see a lot of colors in the graph. The blue one is domestic M&A, the number of domestic M&As. The green one is the inbound M&As in the Japanese market. The yellow one, which is not our topic, but it's like an outbound transactions from Japan. So as you see from this graph, overall, the number of Japanese M&A deals is continues to increase in the past like 40 years. And if you look at like the past 10 years also, there you can see probably like a double increase in double from like 10 years ago. But you will also see that the green part, the investment from overseas companies, this is still a small number. So I understand that the attendees in the webinar here are mostly overseas from Japan, but I will expect you guys to expedite Japanese investments. Okay, the next slide is about the deal value in the Japanese M&A market. So I said there was a slight decrease in the number of M&A deals compared to 2022, but as for the deal value, there was actually a slight increase of more than 10% from 2022. The increase was actually led by two huge transactions here. So one is the famous Toshiba acquisition, and the other is the JSR acquisition. So these led to the high deal value. Okay, this will be a very short summary, but overall, as we saw, the Japanese market in Japan, Japanese market in terms of M&A in 2023 still looked very stable, and it wasn't significantly affected by the global recession trend. We will touch on the forecast for 2024, but that was the overview of 2023. So the last slide for this topic is about post-COVID situation in Japan. So I just briefly explain this slide. So as you might know, the Japanese government was kind of like careful, took the careful stand to COVID until very recently. So it was only in early May 2023 when all the COVID-related restrictions were lifted. So before that, actually, there were hesitance from overseas clients as well in traveling into Japan, because it really took time for the clearance process. And also the other way around. So the Japanese people were a little bit hesitant to go out for their potential M&A deals. But after the May 2023, when the restrictions were lifted, I think there are more motives from Japanese companies and also from foreign companies to invest in the Japanese market. So this will also be a very positive aspect of the Japanese market. Okay, now I move on to the next topic. So maybe many of you are familiar with the Japanese M&A process and Japanese M&A market. But anyway, I will just touch on the brief basics of the Japanese M&A. So the types of M&A deals we see most often share acquisition or share purchase deals in the Japanese market. This will be probably the same in other jurisdictions. So it's most simple and probably the most accessible way to do an M&A in the Japanese market. So if it's a public deal targeting a listed company in Japan, there might be some regulations, financing related regulations coming into play. So you have to be careful about that. Also, even if it's a private M&A targeting private companies in Japan, relatively smaller deals, you have to also be careful about the FDI regulations. This will be a very restricting factor of a smooth M&A in Japan. So we will actually explain the details in the next part about this FDI regulations. So of course there is also a merger filing requirement. There is a mandatory threshold in Japan. We will not explain the details of the requirements in our presentation today, but this will also be something that has to be borne in mind when investing in Japan. Okay, the next form is business asset transfer. Of course, this is also a very common type of M&A deal in Japan. So we see a lot of domestic deals, business transfer deals in the Japanese market, but recently we also see some cross-border business asset transfer deals. So it's a relatively flexible form of M&A, of course. So for example, if a US company wants to transfer some of their businesses in the Japanese target, that is also possible under Japanese law. But again, there are restrictions to that kind of M&A. One is, of course, the FDI regulations. The other is merger filing thing. So those have to be borne in mind. We also see like a lot of intra-group transactions using this form. So I think business asset transfer is getting more like popularity in the Japanese market. Okay, in terms of the domestic M&A deals, there are other forms that can be taken. So they are called like corporate reorganizations, and they are all prescribed under the Companies Act of Japan. But as I wrote here, actually, in terms of the foreign companies' investments in Japan, these forms would not be a choice usually. That is because these corporate organizations forms are usually designed for like pure domestic deals. So there are various factors or various hurdles to go over if a foreign company wants to use this form. Okay, I just briefly touch on the typical M&A process in Japan, but I said brief because this is not very different from other jurisdictions. So as you see on my slide, it's a really like a normal way to proceed. There are, of course, like Japanese specific regulatory procedures, or there might be some issues to be considered to arrange a financing, but it's not very, unique in Japan. So I just touch on the key points to note about the M&A process in Japan. So these are probably more important compared to the last slide. I would explain 4 points here. So one is, as you might have seen in Japanese transaction, usually the Japanese companies' decisions or like negotiation process take longer than usual or expected. That is partly because some Japanese companies, especially all like listed companies, have various like decision-making layers within the company. So that makes the Japanese companies' decisions really slow. So that is one factor that has to be borne in mind. And of course, there are still language issues in terms of Japanese M&As. Many Japanese people now speak good English. Also, Japanese lawyers can handle English documents. But still, many of the clients, companies in Japan, or even the lawyers in Japan, do not comfortably use English. So that could be a barrier for Japanese M&A deals. The third point is about the due diligence in Japan. So this is also a very typical, not very different form to be taken in other jurisdictions. But what I wanted to say here is because Japanese companies usually have a very high standard in terms of their compliance, especially compared to like the Southeast Asian companies that I see every day in Singapore. There are not many red flag legal issues to be found in the due diligence process. So this would be probably a positive factor of Japanese M&A. So the last point I wanted to make here is the closing process. So there's no need for physical closing usually at this moment. Many of the Japanese companies also prefer to take out like a online based or a document based closing process. But you also have to be aware that in certain cases, maybe the Japanese clients, Japanese target companies prefer face-to-face meeting for the closing process. And also in cases, the Japanese target companies issue share certificates, and those have to be physically delivered in order to complete a share transfer deal. So this could be one hurdle when considering the closing process of a Japanese M&A. Okay, now I hand over to Ryoichi for the next topic. Ryoichi,
Thank you again.
please.
Yes. Next, please. Thank you. Yeah. So there are a lot of the topics to be discussed about the Japanese M&A market, but given the limited time, we would focus on two large topics. One is the deal drivers in a Japanese M&A market, and the other is the recent update in the regulatory area of the Japanese M&As. So for the first topic, deal drivers, as again touched, we experienced the record high years in 21 and 22, and those years have been led by the private equity and investment, of course, from US and Europe, but also the domestic Japanese and private equities. And given the low interest rate in Japan, still the finance is very easy to access. Therefore, still private equity M&A is very, very active in Japan. And at the same time, we are witnessing two looming trend in the Japanese M&A market. One is the startup tech M&As, and the other is the same as other jurisdictions, the ESG related M&As. And the other topic, the regulatory areas of M&As. So we've been experiencing and also ongoing the update in M&A regulation. But so, for instance, we have learned that the European Commission just proposed a new European-wide FDI regime. And in Japan, we also had a continuing development in the FDI regulation. So we will deep dive in this topic. And also, there are many guidelines and new legislation coming up in the public M&A area. We might not have a decent time to dive into those topics, but we would like to give a heads up in two large area. One is Ministry of Economy, Trade and Industry, METI, has introduced a new guideline for the corporate takeover last year. And the other is still ongoing discussion, but Financial Service Agency is discussing about substantial material reform of the regulation on tender offers and also the large shareholders report, and which will be and expected to be harmonized with the newly introduced guidelines for corporate takeovers. Next, please. So startup M&A market. So we have witnessed the growing number of startup investment last few years, and many of them were actually minority investment from the venture capitals as well as the corporate venture capitals. But even in Japan, the IPO environment is getting more and more difficult these years. The founders, venture capitals are thinking about the M&A as the exit option rather than the IPO. Different from the US market, for instance, in Japan, previously, the IPO is a major exit for the startups. So roughly speaking, 70% of the exit was IPO and 30% was the private M&A and transactions. And the Japanese government and also venture communities are trying to increase the number of startup M&As so that our startup ecosystem would be developed more. So as shown in this slide in the bottom, the Japanese government announced their aim to increase the startup investment 10 times more in 5 years. And the more and more startups are encouraged to be founded, and also the Japanese government is working on the reform on the, for example, tax legislation friendly to the startup investment, as well as the new founders of the startup. So therefore, this entire trend and environment is pushing the M&A market to more focus on the startup M&As. And when it comes to the cross-border context, we are advising to many foreign companies, investors trying to start business in Japan by acquiring the Japanese startups, especially in a regulated area like fintechs, healthcares, etc. So as you all know that in the regulatory area, when you wanted to start business in Japan, the business license is required. But the startup M&A can be a pathway to get into the Japanese market without getting a business license by yourself. So this would be a new trend in Japan on the startup M&A market. Next, please. And ESG. Of course, we've been asked about the ESG issues from non-Japanese companies and law firms quite frequently. And development of the ESG matters in Japan is still following the development in Europe and also US. So the Japanese government recently introduced the disclosure obligation in the annual report about the ESG, but it's still quite broad and not detailed as in Europe or US. At the same time, the ESG activism, well, we are seeing slight increase in the shareholders meeting where the activists are insisting and claiming about the ESG related matters, but they are not, they are still quite modest. And there are less pressure to the Japanese companies from the ESG perspective, from the activist. So then why the ESG investment is increasing in Japan? So after the selling out the non-core business from Japanese companies to private equities last 5-10 years, Japanese companies, especially traditional Japanese companies, are revisiting their business portfolio from traditional businesses to ESG friendly or tech oriented businesses. So in this context, increasing number of Japanese companies are paying attention to ESG friendly businesses such as decarbonization, carbon neutral businesses. This is not only in a Japanese market, but also in a overseas market. For example, Jela made a huge investment in a European LNG business in 21, and this trend is still ongoing. And next step, well, Japanese government and also Tokyo Stock Exchange is reforming their ESG disclosure requirement. And there are ongoing discussions to introduce more high level, high standard of the ESG disclosure. So for Japanese companies, especially listed companies, they would be paying more attention to the ESG investment and also sustainable disclosures. Next, please. So those are two new trends in a M&A market in terms of the deal drivers. The second large topic is the M&A regulation, and FDI regulation is also frequently asked question from non-Japanese law firms and companies. So Japanese government have retained friendly attitude and environment for the foreign investors. Our FDI regulation has a decade of history, but our regulatory review is not as tough as, for instance, CFIUS. Well, probably because of that, even under the COVID time, we had a lot of the inbound investment from overseas, US, Europe, and other Asian countries, etc. So how our FDI regulation is relaxed more relaxed from the other jurisdiction. So the Foreign Exchange and Trade Act, FEFTA, governs the FDI regulation, and this primary reporting form is ex post fact report, so which is the report after the closing. So the pre-closing screening is limited to certain sensitive business sectors, which is called designated business sectors. And the statutory waiting period is 30 days from the acceptance of the report, but this can be shortened for a simple case where there is no concern from the economic security. So why? As we will touch later, Japanese government expanded the designated business sector over the years. And because of that, the Japanese regulators appear to be overwhelmed by enormous number of notifications, FDI notifications. So we experienced that the Japanese regulator is focusing on sensitive, serious cases. And on the other hand, for simple cases, they will try to clear the case as efficiently as possible. So that's why the 30-day waiting period can be shortened for simple case. And in our FDI history, there is only one suspended, blocked case in a nuclear area. So, of course, these days, Japanese regulators might ask you to provide some covenants, conditions to do a FDI investment. But again, there is, practically speaking, there is very low risk where Japanese regulator blocks the case. Next, please. So designated business sectors. traditionally designated business sectors was limited to traditional national security business sectors such as broadcasting, telecommunications, electricity, transportation, and etc., etc. But in line with the global trend, Japanese government rapidly expanded the scope of these business sectors. So software-related business, of course, during the COVID time, they added the pharmaceutical-related manufacturing business, and recently cybersecurity, etc. So again, Japanese government is friendly for the FDIs, investment from overseas, but nowadays many of the FDIs can be captured by the pre-closing notification requirement. And of course, there are some exemptions to those pre-closing notification requirement, but it's very technical and complicated. So we are advising to our client, international client, when they think about investment into Japan, FDI analysis in an early stage of the project is very important. Next, please. So there is the new related trend with the FDI regulation. Japanese government newly introduced the economic security regime, which is called the Economic Security Promotion Act. The purpose of this new legislation is to retain stable supply of certain sensitive products. For instance, semiconductors, batteries, and important minerals, etc. And this aspect of the stable supply of the sensitive materials are now influencing the FDI review. So there is no separate notification, but if the target business engage any or involve any specified important goods, this will be reviewed in an FDI review, and you might get detailed questionnaires from the Japanese regulators. So before the introduction of this Economic Security Promotion Act, we can easily, or we can relatively easily decide whether the certain case is a simple case or not. But now we need to consider about this aspect as well. And as a legal counsel, it's getting more complicated analysis whether a certain case is simple case or not. So again, FDI would be a headache for the deal lawyers and also those who are handling the transaction in the company to picture the deal timeline. And Japanese FDI is getting more and more important and to decide the deal timeline in the early stage of the transaction. So again, it's very essential to talk with the local counsel earlier than before to make an analysis on the FDI regulation. Yes, next, please. So this is the just a wrap up tips about the FDI regulation. So now Japanese FDI regulation can broadly capture the transaction into Japan. For private company, one share acquisition can trigger the pre-closing notification if the target company is engaged in a designated business sector. Also, there are some exotic exotic requirement in a Japanese FDI. For instance, if you are minority shareholder and exercise voting rights to appoint directors who is related to foreign investors yourself, this can be captured by the FDI notification as well. So, and also during the FDI review, the economic security perspective is getting important, and also in a core business sectors specified in the FEFDA, we need to deal with a lot of questionnaires from the Japanese regulators, which can extend the timeline of the transaction. Okay, next please. So last topic in a recent trend and update in the M&A market in Japan is a public M&A regulation. So this topic is still ongoing and developing area. So we would like you to keep eye on this trend, and we might not be able to deep dive in this topic today. So as we touched already, METI has introduced the new guideline about the corporate takeover last year. And the background of this new introduction of the guideline is that, as again touched, we have experienced a lot of M&A transaction last few years, and also we experienced the development in the public M&As. For example, more and more TOB takeover bid, hostile takeovers, and also shareholder activism. And we had already had the guideline around this area. For example, 2005 guideline touched about the anti-takeover measures. 2019 guidelines described the unfair standard of the management buyout and also management buyout transactions. So the new guideline is covering more broad range of the M&A transactions. And the point is that this guideline is not legally binding, but this guideline covers the court precedent and also the M&A practice and so far in Japan. So we would expect that the court, of course, and also M&A practitioners would follow this guideline seriously, even though it's not legally binding. So because this guideline has newly introduced, we need to pay attention how the Japanese M&A market would be influenced by this guideline. But again, when you think about investment into public company in Japan, it is very important to touch with this guideline and discuss with the local council how this guideline affect your project. Next, please. So, yes, next slide is just for your information. This is a major principle of this new corporate takeover guideline. So mainly aiming to fair M&A, public M&A for both target shareholders and also other stakeholders. So given the time, let us move to the final topic. So as again is based in both Singapore and Tokyo, and I'm based in Brussels, we would like to touch a little bit about the trend in both regions. So investment from UK and Europe into Japan. We saw a little reduction, cool down in the investment from UK, European region to Japan during the COVID time. But after Japan opened the border, we have talked with a lot of delegations and potential investors from Europe and UK, and they are actively looking for the investment opportunities in, for instance, tech area, energy, ESG related, of course, and etc. So we do expect more and more inbound investment into Japan from UK and Europe coming in a next month or coming years. And hot area is again the renewable energy. Of course, we've been working on a lot of the offshore wind project or solar panel project. And also, as we already discussed, the tech and regulated area so that European companies make an entry to a Japanese market. So again, this is the new trend after the COVID from Europe, UK to Japan, but FDI regulation and other M&A regulation is still open to the foreign investors. So we are very much welcoming those overseas investors. Let me hand this over to Gen-san.
Yeah, thank you, Ryoichi. So I will briefly explain the investment trend from Southeast Asia region. So when we said Southeast Asian deals, traditionally, they were mostly the investments from Japanese companies into Southeast Asian countries. So of course, the trend is continuing. The Japanese companies are still very interested in the region. Their investments are actually more active than the years before. But we also see some investments are coming from actually Southeast Asia into Japan. So that is an interesting trend that we see. So probably that change of balance was led by the change in the economic balance between the region and Japan. And of course, as we explained repeatedly, the historically weak Japanese yen and the low interest rate could be helpful in those trends. So the main countries, to the extent I'm seeing recently, that are investing in Japan are Singapore, Thailand, and Malaysia. Those are the most active countries that I understand. But of course, other developing countries, including, of course, Indonesia, Vietnam, Philippines, are also very active and are interested in now investing in Japan. So we also see potential from the increase, well, a drastic increase in those trends. So the number of deals coming from this region is still much less than from the US or Europe, but the increase will be significant in the coming years. So heavily invested industries in Japan, those are not very different from the one Ryoichi explained. But what I see is investments in the real estate, hospitality business, energy, solar, renewable energies, and tech, healthcare, retail, etc. So those are the trends of Southeast Asia investments into Japan. Okay, we have actually one more slide about 2024 forecast. So of course we are lawyers. We are not in the best position to like predict the future or even analyze any trend of the future investments. But still, I would like to touch on this topic briefly. So this is kind of a recap of our presentation today. So there are various positive factors to encourage the investment in Japan. So I think personally the trend will continue in 2024. So the main topics, I explained 3 topics, 3 points that might encourage the investment in Japan. So one is, of course, the COVID-19 related influence. So as I explained, in 2023, actually until April, there were like various restrictions coming from the Japanese government. Those were not on the investment directly, but those restrictions actually restricted the travels between the companies, between the countries. So now without such restrictions, I think there are more like exchange of people, cross-border moves, and that would probably flourish the movement in Japanese M&A market. That is also because like Japanese companies, target companies usually prefer like face-to-face, closer relationship with the investors. Okay, the second point, of course, is cheaper Japanese yen trend. And I don't know about the trend, whether it will continue in 2024. But still, that will continue to be the driver of investment into the Japanese market, at least for a few months. That is the second factor. The third factor is the one Ryoichi kindly explained to you today. So the M&A guidance is updated, has been updated last year. So that will have some impacts on Japanese public M&As, but mostly positive, I guess, because usually some of the complaints coming from like foreign investors investing in Japan were that like Japanese M&A actually experiences like the lack of transparency in the process. So the new M&A guidelines will probably work in a positive way to increase the transparency in their investments. So that is the third factor. So generally, I am positive about the trends in 2024. But well, let me also ask Ryoichi. So do you have any last comments about the trends in Japanese M&A market, Ryoichi?
Yeah, thank you, Gensan. Yes, we do expect that more and more investment would come from outside of Japan, US, Europe, Asia, and other jurisdictions. Again, Japan has opened the border after the COVID, and still we have the friendly environment for the foreign investment, and also there are new investment opportunities in the startup area, as well as the non-core business from Japanese corporations. So even though the M&A market is slightly slowing down from 21 and 22, but still we have the positive outlook in the Japanese M&A market.
Okay, thank you. So now this is the end of our presentation, and I have 5 more minutes to answer your questions from the attendees.
Thank you very much, Jen. And before we move on to the Q&A session, I just want to say thank you to our panel, to Ryoshi and Jen, for their expertise and their thoughts today. It was a really fascinating discussion. Now, we have 2 questions here. I know that you've touched on them during your presentation, but it's always good to sort of go over those questions when we do have them in. So the first question is from Edward. Currently, Japan is pushing negative rates to boost the economy. What is your opinion on the FEFTA regulation? Will they soften?
Okay,
I
probably
think,
Ryoshi, you can go ahead.
Yeah, I would take that question. So as we discussed, Japanese FEFTA or FDI regulation is not as strict as the, for instance, CFIUS regulation. Of course, the designated business sectors requiring pre-closing notification has been expanded and will be expanded in coming years. But again, Japanese government is focusing on serious, severe cases where there is a substantial material concerns in a sensitive business area. So we do not see the possibilities where the government soften, relax the statutory requirement or legislation itself, but in practice, Japanese regulators would take very M&A friendly aspect. That's our expectation.
Okay, thanks, Ryoshi. Just a quick supplementary comment. So I also advise a couple of clients in terms of their investment in Japan, and they had to follow the FDI regulations. They had to submit the pre-closing notification to the competent authority. It wasn't like a easy process. We received some questions from the government, but they were actually really quick, even during the very busy time in December and January. And actually, we didn't have to wait for 30 days in those cases. So I felt, yeah, I mean, the regulations are getting stricter on face, but still the environment is pretty friendly for the foreign investors. That is what my feeling. Yeah.
Excellent. Thank you very much for that. And I know that you've touched on this as well, but we've had a question from Mark. Have Japanese companies slowed down acquisitions in Canada?
Okay, let me answer this first. So as I said, our focus was on inbound deals or the domestic deals in the Japanese market. But because I regularly handle outbound investments from Japanese companies, so I wouldn't limit the scope to investment in Canada specifically, but generally there are more and more outbound transactions to come. That is what we are thinking about. That is because, of course, during the COVID, the Japanese companies were really hesitant to invest overseas. They didn't want to invest where they do not know the target companies physically. They do not know the person who is handling the business overseas. But now the border is open, and still many of the Japanese companies have redundant or so much money in them, and they are looking for a proper destination to invest, even outside of Japan. And I think, of course, Southeast Asia is one of the destinations. The US, Europe, very good opportunities there, but Canada can be also a destination in those Japanese companies selection. So I wouldn't say it's a very positive trend into Canada, but in terms of the outbound transactions coming from Japanese companies, I am generally very positive.
Yeah, if I may add one note, is that as we touched we are seeing a lot of the delegation from all over the world after the COVID, and Canada is not an exception. And the other day, I attended the conference of the corporate venturing in Tokyo, for example, and there were the delegation from British Columbia, and they had good interaction with the Japanese investors. So we are hoping that in Canada, you can see more Japanese investors in the coming months or years.
Excellent, brilliant. Thank you very much for those answers. Looking at the time, I think that we will need to wrap up there, but any questions that you have asked that perhaps we haven't got to, please do reach out to Ryoshi and Jen and the firm, and they'll be sure to be in touch. So once again, thank you very much to our wonderful panel for your time today, for your expertise, and thank you very much to our audience for being with us. We really appreciate it. I wish you all a lovely rest of your day. Goodbye.
Thank you very much. Bye.
Thank you.